All right. Assalamualaikum and good morning, everyone. So for today, we are going to start with financial ratios. We are still in the financial ratio topic. All right. And if I'm not mistaken, we stopped until the last liquidity ratios, which is net working capital. Okay. So now we're going to continue with the second types of financial ratio, which is the leverage ratios. All right, so when I set leverage ratios, you can imagine leverage here. Okay, leverage here refers to debt. Okay, it is actually debt liabilities. Okay, so the purpose of leverage ratio is to measure, first of all, is the financial structure of the company. Okay, remember when we do, or when you can see the balance sheet, we have assets here. We have liabilities, which is debt, and also equity at the bottom here. So the firm's financial structure refers to the compositions, compositions of liabilities versus equity. You want to see whether this company are more on liability side or on the equity sides. Okay, so we want to know the composition, which is known as the financial structure of the company. Okay, and to know to what extent the firm is levered by debt. Okay, kebergantungan kepada hutang. Okay, levered by debt. And on top of that, ability to service is debt, whether they have the capability to pay the debts on time. Okay, and last time when we did the current ratios, that ratios mostly covers for short-term obligations. But when we talk about debt here, it refers to the whole debt area, including the long-term one. Okay. So the higher degree of indebtedness will result to higher risk. Okay, for this ratio, some of the ratios, because we're going to have three more ratios here. If you remember, for liquidity, the higher the ratios, the better, right? But for this leverage ratios, 2 out of 3 indicates if the higher the degree or the higher the ratio, it indicates the higher risk. Therefore, it's not something that we want with a high risk kind of situation. Okay. So these are the 3 ratios, okay, under the leverage ratios. All have debt elements, like I can say, debt elements, except the last one, okay, whereby we're gonna measure the capability to pay its obligations. Okay, and anyway, first we have debt ratio. Okay, debt ratio. For debt ratio, we have alternative name. Okay, they have alternative name for debt ratio. It's also known as debt to asset ratio. Okay, this is the alternative name of the ratio, debt to assets ratio. So if we know the alternative name, this is basically the formula. We have debt and we have assets. Okay, so technically the formula would be debt divided by assets. Okay, debt divided by assets. And again, if you recall, when I said debt earlier, this is liabilities. In fact, the total liabilities. So we want to measure the debt, we're going to take the total liabilities. And assets, obviously, we're going to have the total assets as well. Okay. And then we have debt to equity, the second ratio. Okay, debt to equity. So if debt to asset, the formula is debt divided by assets. But if it's debt to equity, it means the formula will be debt divided by equity. Okay, very straightforward. From the name of the ratio, it shows us what is the formula. And lastly, we have times interest. But anyway, let's go one by one. So the debt ratio. So it measures the proportion of the firm's total debts. Again, total debt here refers to total liabilities to its total assets. Okay, and both items can be found in the balance sheets or in the statement of financial position of the company. So it indicates the amount of debt in the financial structure. So here we can see the financial structure, which size is higher, the debt or the equity. And obviously, this is important to analyze the long-term financial risk of the company. So as I said, the alternative name is debt to assets. So therefore, the formula is total debt divided by total assets. And whenever you see the answer will be in percentage, you need to multiply by 100 lah, by default lah. If it's in percentage, multiply by 100 to get the percentage. And the higher the ratio reflects the higher amount of debt to finance its assets, which is not good lah. The higher the ratio is not good. So last week, we used December 2018 as our reference when we do all the ratios. Now, I need to open a whiteboard. Right. Tadi macam ada orang nak masuk tadi. Anyway, so now you're gonna calculate the debt ratios. I want merah. Okay, debt ratio. So for the ABM motorists, so we have the total debt. So remember, when we set total debt, it includes the current, so the current liabilities. The current liabilities includes these 4 items. Okay, this is the current liabilities, and this is the long-term liabilities, the long-term debts. Okay, and these two obviously are the equity. So to find the total debt, okay, because the formula is total debt divided by total assets, right? So the total debt includes the current liabilities plus the long-term liabilities. Okay, last week I wrote the total, but since I already erased that, I have to calculate again. 16 plus 4 plus 10 plus 14,000, and then plus 120,000. So the total debt would be 164,000. Okay, where I get this 164,000? From 16,000 until 120,000. So you sum everything, the current liabilities plus the long-term liabilities to get the total debts. Automatically masuk lah, tak apalah. And for the total assets, you don't have to calculate everything. It's here already. This is our total assets, right? So 367,000. Okay, and don't forget to multiply with 100 because the answer will be in percentage. Okay, again, if you cannot recall whether it's percentage or not, usually here they specify the unit, okay, which is in percent. So 164 divided by 367,000 multiplied by 100, you get here about 44.69%. Okay, 44.69%. Okay, so again, as you recall, I said last week in the notes here at the very bottom, okay, we have some explanation that we can use. Okay, so for now the ratio is 44.69, yeah, so which is better than the industry average of 55%. And again, I like to remind, we always comment on the company that we analyze, which is, in this case, is the ABM Motorists. Okay, so what we can conclude based on this, we can say that the ABM Motorists has a better debt ratio as compared to the industry average, and indicates that they have we have to alternate. It's not higher amount, it has a lower amount of debt to finance its assets. Okay, because the ratio is lower for that particular company. Okay, so that's debt ratio. Next, we move on to debt to equity. Okay, debt to equity, as I said, the total debt will be the same, but we're going to divide the equity. All right, so again, if we remember the format of the balance sheet, we have assets here, and we have liabilities, which is debt, and equity here. So now I'm going to segregate the liabilities and equity sections. Okay, just now for debt ratio, what we did was based on liabilities, beside the top part of the right hand side, we divide with the total assets on the left hand side, the whole thing, okay, because it's total assets. Okay, the top right part of right hand side divide by total assets on the left hand side. But here, debt to equity, what we do is we take the liability still top right hand side, but now we divide with the bottom part. Okay, this part divide by this part. Okay, so this is actually an alternative way, okay, to measure the level of debt of the company, and ratio greater than 1.0, or if you want to convert in percentage, you're going to get more than 100%. Okay, indicates that the firm use more debt as compared to equity. Okay, and again, the higher ratio is less desirable, which is not something that we want, which indicates greater use of debts. And therefore, when we set they have a lot of usage of debt, it indicates that they have a higher financial risk. Okay, dia terlalu bergantung kepada hutang as compared to their own money. Because remember, equity refers to the shareholders punya contribution. Okay, so again, the answer will be in percentage. So don't forget to multiply with 100. And the higher the ratio reflects the higher amount of debt, which indicates the section of the capital structure, which side will be dominant, either liabilities or equity. So whenever the answer is above 100%, it indicates that the company has reliability on debts as compared to equity. Okay. So for this question, we don't have any point of reference because the question actually doesn't ask us to calculate the debt to equity ratio. Debt ratio, yes, 55%. So for this case, the companies has better debt ratio because lower than the industry average of 55%. But if you want to calculate the debt to equity, DE means debt to equity. So we have total debt divided by total equity. And again, the total debt is 164,000. And the equity would be the common stocks plus the retained earning. Okay, 172,700 plus 30,200. So a total of 203,000. Okay, multiplied by 100. So here is around 80.79%. So it's still quite high because it's above the 50% benchmark. But anyway, because we don't have any point of reference, we cannot say anything about the performance of the company with regards to debt to equity ratio. Okay, so that's actually one downside of financial ratios. Whatever amount that we get, okay, like this, if there's no point of reference, meaning if you cannot compare with anything, it is somehow can be, I can say useless, because it's hard to comment on the performance as is basis, because we always need to comment, or we need to compare either against the company's previous performance, meaning from previous years, for example, or if they compare against another company or at least with industry average. Okay, or else this pretty much will be somehow, it's hard to comment lah, basically, whether it's good or bad, right? Because different industry will have a different rule of thumb in terms of the ratios. Okay, so that's why again, when we do financial ratios comparative, you cannot compare one company with another from different industry. It must come from the same industry. Okay, or else it will not be fair to judge ataupun fair to compare lah between the two companies' performance. Now, that's the second ratio under leverage, debt to equity. Right, and the last one under the leverage ratios is times interest earned. Okay, or in short, the acronym is TIE lah, TIE. Okay, times interest earned. Okay, so for this ratio, the only ratio within the leverage ratios which the higher ratio is desirable. Okay, the only one. If you remember, debt ratio dengan debt to equity, the lower the better. But for times interest earned, the higher the better. Because again, number one, the answer will be in times. And this measurement is actually to measure the ability of the firm to pay interest charges. So we want to see, like I said lah, their capabilities or ability to service its debts. Okay, to service its debt. So the higher the ratio indicates they have a higher capabilities to pay the debt, right? And this also can be used to determine whether this particular company has ability to own or to have new debts if they want to measure lah, right? So the higher the ratio indicates the firm can meet loan charges, and when they can meet the loan charges, obviously they have a lower risk of defaults. Okay, default, if you remember, if you know, is non-payment of loans. Okay, so for this ratio, okay, we're not going to look at the balance sheets. We are going to see the income statement. Okay, so the first two ratios of leverage, we used items within the balance sheet or the statement of financial positions. Okay, but for times interest earned, like TIE, we're going to use items in the balance sheet, in the income statement. Okay, in the income statement. Okay, so there's a reason why, if you remember last 2 weeks during our first seminar, we have one item missing from this, which is earning before interest and taxes, EBIT. Okay, which is missing from this information from the statement of financial income or the income statement. Okay, and as I said last week, there are two ways how to find the earning before interest and taxes, either top down ataupun bottom up. Kalau top down means you are going to take from the gross profits, okay, and then you minus with the operating expenses. Okay, so then you're going to get the earning before interest and taxes. So for 99,300 minus with 90,000 operating expenses, so you're going to get 409,300. Okay, so that's one way to get it, earning before interest and taxes, because they fall just after you minus the operating expenses. Okay, or if you're going to do from bottom up, so we need to take the items after EBIT, which is earning before tax. So earning before tax, we're going to add with interest. So earning before tax basically is EBT. So to add the I interest kat dalam ni. We add interest lah. So 399,700 plus 9,600. Again, you're gonna get 409,300. So there are two ways how to find the earning before interest and tax. But this is again based on this question lah. Selalunya, sepatutnya, okay, earning before interest and taxes will be in the income statement. Just for this question, they just hide it so that you need to find yourself. Okay, so for times interest earned, the formula is actually earning before interest and taxes, and we divide with the interest. So technically, the earning before interest and taxes and interest is actually from one row to another. Okay, earning before interest ni atas interest itself je. Okay, cuma untuk soalan ni, like I said, dia hide kan earning before interest and taxes ni. So therefore, the 409,300 ni kita kena cari sendiri. Okay, the two ways I mentioned, from top down or bottom up, either way can be used to find the earning before interest and taxes. And the interest itself is 9,600. So 409,300 divided by 9,600. So here you can see the huge amount of 42.64 times. Okay, almost 43 times dia punya capability. Okay, and as you compare against the industry, the average industry has 35 times. Again, like I said, times interest earned, the higher the better. So this indicates that this company, ABM Motorist, has a better times interest earned as compared to industry average, which indicates that the company can meet the loan charges and has a lower risk of defaults as compared to the industry average. Okay, so make use of this statement to analyze. Right, so that's our final ratio under the leverage.
Hello, sir.
Yeah.
I just want to ask, can you write down the EBIT formula since I cannot catch it just now?
Okay, so this is not actually formula lah, tapi yeah, you can use it as a formula if you want. So it can be found either using gross profit minus operating expenses. Okay, this is one way, gross profit minus operating expenses. Or you can take earning before tax. Okay, don't get confused. EBT and EBIT is two different profits. Ni yang EBT ni kita dah tolak interest. So in order to get EBIT, so we just add with interest.
Okay.
Okay, and so, by the way, if you, again, kalau you ingat, I dah cakap 2 weeks ago, earning before interest and taxes ni sometimes is also known as operating profit. Okay, operating profits. Okay, so some areas they might use operating profits. It's basically the same as earning before interest and taxes. Okay, boleh
usually operating earning before tax ni memang dia akan bagi direct on the spot lah, kita tak payah kira lah.
Earning before tax, EBT.
Dia memang akan bagi direct lah dalam soalan.
Bagi direct maksudnya?
Jawapan kita terada dekat dalam soalan, kita tak payah kira macam tu lah.
For EBT?
EBT.
EBT most of the time they will give because we seldom use it as part of our formula pun.
Okay.
But EBIT we need to use it in the times interest earned. So that's why for this type of question they hide it.
I see.
Tapi kalau you bila, let's say you want to do your assignment later kan, you don't have to calculate it. It will be in the statement. You can see it very clearly, earning before interest and taxes.
Okay. Thank you, sir.
Right. Just to let you know, sometimes some reports, they're gonna have additional earning before interest and taxes and depreciation and amortizations. Okay, this is quite technical lah. Okay, so don't get confused kalau ada ni juga. earning before interest, taxes, depreciation, amortization. Okay, but we're not gonna look into this lah. Okay.
Yes, sir.
Right. Now, this is the third one, the activity ratios. Right. So for these activity ratios, we're gonna look at their performance. Okay, internally, how efficient the managers uses the availability of the resources. Okay, when we talk about resources, usually we look at the assets. Okay, they utilize the assets in order to generate sales. Okay, so a lot of ratios under the activity ratios, we're going to use sales figures. Okay, sales ataupun revenue, depending on the company. Some company yang involved with service, dia tak kata di sales, dia akan kata di generate revenues. But basically it's the same thing, depending on the types of business. And yeah, so this is going to look at the manager's effectiveness in managing the firm's assets and also handling the firm's operations. Right, so we're going to have 6 kalau tak salah, or 5 je. Okay, so there are 5 here, 5 types of ratios under the activity category. We have average collection period, okay, account receivable turnover, inventory turnover, fixed asset turnover, and total asset turnover. Right. So out of these 5, you can see ada 4 with turnovers kat sini. Right, we have 4 turnovers. Okay, so by default, turnover here, you can associate it with sales. Okay, when you see the word turnover, you can associate with sales. So meaning, we know the formula will have sales information. For example, I ambil the last one, total asset turnover. So we have the first part of total assets, and when asset turnover equals to sales, then we know we're going to have sales juga kat dalam ni. Okay, similar like this one, fixed asset turnover. So we have fixed assets, and we're going to have sales, right? But let's look one by one. It starts from the ACP, average collection period. All right, so this is the ratio, the only ratio, in fact, that gonna use days. Okay, days. You remember tadi kita ada in times, ada in percentage. If it's in times, we don't have to multiply with anything, but in percentage, we multiply with 100. In days, usually what I'm gonna do, I will multiply with 360. Okay, but anyway, nanti I explain. So this ACP will determine the average length of time taken by the firms to collect its debts. Okay, so this is basically about collection. How fast the company can do their collections, especially when they do credit sales. Okay, because companies sometimes they don't do, ataupun they split between cash sales with credit sales. So there are portion customer bayar cash, there are the portions customer akan hutang. All right. So here you want to measure how fast the collection of the company. So when we say, or if we want to measure dia punya average length of time taken tadi kan, obviously the best would be, ataupun the better would be the shorter the number of ACPs, the number of days. Right. So here the ACP, again, the lower the ratio, the better. It shows that the company has faster collection period. Okay, and when they have faster collection period, it indicates that the company doesn't have problems in collecting debt. Okay, dia ada problem kalau number ratio dia lagi tinggi lah. Alright, so the ACP formula there is account receivables. Okay, so this can be found in the balance sheet. And we're going to divide with daily sales. So, sales memang kita boleh nampak from the income statement, but now they want to know the daily sales. So there are 2 ways actually how to find this ACP. Right, so I letak yang default dulu. So ACP yang pertama, based on this formula, is account receivable. You divide with daily sales, right? So you're gonna do sales. Okay, get the sales figure from the income statement, and in order to get it in daily basis, you're gonna divide the sales by 360. Okay, you divide with 360. Okay, we use 360 and not 365. All right, we use 360. Okay, some question even they specify, okay, please use 360. Okay, alternatively, instead of you divide sales as a denominator bawah ni, we can use ACP. So you can find ACP based on, again, account receivable. But now we divide with sales. Ambil the sales divide, and we multiply the 360 outside. Okay, outside of the first ratio. Okay, you're gonna get the same answer. Okay, you're going to get the same answer. But if you ask me personally, usually, ataupun most of the time sebenarnya, I'm gonna use this one. Because it's easier to remember juga, sebab we know kalau percentage kita darab 100, but in days, we multiply with 360. Okay, so it's pretty much the same. Information semua sama, cuma cara 360 ni digunakan lah. Either you divide as a denominator or simply multiply after you divide first. Right, so again, let's look at the question. Okay, so ACP is part of the question. The industry's average ACP is 20 days. 20 days. So for this company, the ACP, again, I'm gonna write the formula: account receivable divided by sales times 360. So the account receivable is 30,000, okay, in the balance sheet, 30,000. And the sales figure is from the income statement, 800,000 and 800. And multiply with 360. So 30 divided by 800 times 360. So the answer is here is about 13.5 days, but I'm gonna round up it. Okay, round up siap-siap je lah. I'm gonna use 14 days. Sebab hari macam mana nak kira point kan. So for days, I'm gonna round up to 14 days. Okay, so again, the ACP of the company is better as compared to the industry average. Okay, because they can collect faster. So this company just require 14 days for their collection as compared to industry average. As a whole of the industry, on average, is 20 days. So therefore, it indicates that the company has a faster collection process and has less problems lah, okay, of collecting debts, okay, in collecting debt. Okay, so that's our first ratio under the activity ratio, ACP. So out of 20 something ratios that we have for the whole categories, this is the only ratio with days. Okay, mostly either percentage ataupun times. Okay, so next is account receivable turnover. So this is our first turnover ratios. Okay, as I said tadi, we have first account receivable, and then we have turnover as the second items. Okay, and as I said, turnover you can associate with sales. Okay, so higher account receivable turnover indicates efficient receivable. Okay, so technically, whenever you see the answer in times, the higher the better. Okay, the higher the ratio, the better the performance. Right? Okay. The word turnover earlier, I said you can refer to sales. Okay, but if you see the positioning of the name of the ratio, is account receivable sales. So in a logical order, okay, supposedly Kalau you nampak, account receivable turnover, dua-dua ada items. So you just divide lah, account receivable divide by sales. Okay, but that's not the case. You can see here pun formula dia bukan macam tu. So the turnover ni, okay, this is one of the way last time, because last time kita ada final exam, to memorize the ratio. The word turnover ni can mean two things. First is the sales yang cakap tadi. Secondly, the word turnover. You turn it over. So meaning the positioning of the items here, you turn it over, you terbalikkan. Instead of account receivable by sales, you switch it over ataupun you turn it over, you terbalikkan. Here go first, account receivable go second. So meaning it will be sales divided by account receivable. So that's why the formula is like this, sales divided by account receivable. So for the rest of the ratios, most of it lah akan ada satu ratio je yang lain daripada yang lain. But for example, like fixed asset turnover, total asset turnover, you're going to see the formula will be something like this. You just switch it over je. Instead of account receivable bagi sales, you flip it, kita balikkan. Okay. So again, okay, maybe lepas ni I tak tunjuk semua kot ratio, nak tunjuk satu-satu mungkin makan masa But maybe I'm going to focus whatever ratios yang ada je yang tinggal. So current ratio, quick ratio, you already done last week. Debt ratio and times interest earned, so far kita dah buat. ACP, also we've done it. So we left with inventory turnover. Okay, but for first tadi account receivable turnover, okay, I akan tunjuk account receivable turnover lah juga sebab I dah tunjuk ratio dia tadi. So the formula would be sales divided by account receivable. Okay, again the sales is 800,800 and the account receivable just now is 30,000. So if you recall, the formula is actually pretty much the same as ACP, but this is the alternative way to measure. Okay, but we don't multiply with 360, we just divide like this. 800 by 3,000, 30,000. So you have 26.7 times. Okay, again, we don't know whether this is good or bad because we don't have the point of reference to compare. Okay, but next we have inventory turnover of 8 times. So this we can compare, and that will be our next ratio if I'm not mistaken, after the account receivable. And just to let you know, for inventory turnover, even though we have turnover, we have this rule of turnover equivalent to sales, and then we flip it over. The next one, the inventory turnover, this is the only ratio with the name of turnover, which will not use the same rule. Okay, they have their own rule dalam case ni. Okay, so inventory turnover will measure the the effectiveness of the firm uses inventory to generate sales. Okay, so obviously the higher the better because the higher ratio indicates they are more efficient, they have a lower cost of investment on inventories and so on. Now, still ada sales kat sini. We have sales also, but because dia ada alternative ataupun or kat sini, the priority for this formula, we're going to use, instead of sales, we're going to use cost of goods sold. Okay, this is priority number one. Kalau tak ada, if COGS is not given in the question, katakan, then you can use sales. If. Right, but most of the times, you can find cost of goods sold. Okay, sometimes they use the word cost of sales, right? It's the same thing. So cost of goods sold usually ataupun most of the time dia ada. So therefore, to find the inventory turnover, we're going to use cost of goods sold and we divide with inventory. So in terms of the positioning, the turnover part, we still turn it over. Okay, but instead of sales, now you're going to use the cost of goods sold. Okay, the only one dalam inventory punya turnover ni that use cost of goods sold instead of sales. Okay, again, the answer in times, the higher the ratio reflects how effective the company using the inventory to generate sales, right? like I said, if the value of cost of goods sold not available, then we can use the sales as replacement. Tapi the word is if. Okay, kalau tak ada. Right. So the question provides us a point of comparison, which is 8 times here. So for inventory turnover, right? So I'm going to write the formula again. It's cost of goods sold divided by inventory. Okay, so the cost of goods sold is the 301,500. And the inventory is going to look in the balance sheets. Inventory there 50,000. Okay, 301,500 by 50,000. So you have 6.03 times. Okay, and the industry average is 8 times. Okay, 8 times. 100, 50,000. So again, right? Let me check it out. Okay, so what does it mean? This indicates that the company's inventory turnover, okay, is worse as compared to the industry average, because the higher the ratio, the better. And so this indicates that the companies has less ability, less effective in utilizing its inventories to generate sales. Okay, so they are the less ability. So you can say the company's the company's inventory is worse as compared to the industry average, which indicates that the company has less effectiveness of using inventory to generate sales. All right, so that's inventory turnover. All right, so for the final two ratios, we have fixed asset turnover dengan total asset turnover. So we're going to go back to the original rules. Okay, so sales, and then kita flip position there. Okay, sales divided by fixed asset, and sales divided by total assets. Very straightforward. From the name of the ratio, we can know how the formula looks like. Okay, both the higher the ratio, the better, because all answer in times. So how to explain the fixed asset turnover? The higher the ratio indicates that the company has effectiveness of utilizing fixed assets to generate sales. Okay, and kalau total assets indicates effectiveness of using total assets to generate sales. Okay, so that's our final ratio for this is activity ratios, the third category. Okay, so far kita ada liquidity 3, then we have leverage, so 3, and activity we have 5 so far. So kita ada 11 ratios so far. Okay, now moving on to the fourth category, which is profitability. Okay, so profitability ratios, nama profitability ratios, and so we're gonna measure mostly their profits. But if you recall, in the income statement, we have multiple levels of profits. So you're gonna see some ratios, you're going to use different types of profits. When I said different level tu, again, bear with me one second ya. Kalau you tengok dalam income statement dia, kita ada, for example, first kita ada gross profit. Okay. Gross profit. Then kita ada earning before interest and taxes. So this is the second level of profit ataupun operating profit, ada yang cakap nama lain dia. We have EBT, we have net profit juga ataupun net income. So we have different level of profits. So we might use different types of profit for different types of ratio. Okay. But most of it, we still gonna use the last one, the net profit ataupun the net income as our items in the ratios. Okay, so most of the ratios under profitability will be better, is preferred, high ratio is preferred. And okay, most mungkin ada certain ratio yang satu kalau tak salah. The lower, the better. And this will promote the achievement of wealth maximization, okay, how to attract outside capital, especially when we want to raise fund. Okay, bila kita nak jual bond ataupun to jual ataupun to issue new shares. So this will attract external investors because we have a good profitability ratios. Because when we set profitability ratios yang bagus, yang tinggi, it indicates the tendency or the potential to get high returns when we invest in this company. So from investment point of view, okay, profitability ratio is very important. Okay, kalau yang tadi tu kita nak tengok company tu efficient ke tak, is it dependency on that or not. But for profitability ratios, investor obviously pay closer attention for this because this indicates potentially how much income or how much returns can we get from this investment. So here we have 6 ratios. Okay, 6 ratios. So this ratio number 3 ni, operating ratio, this is the only ratio that the lower the ratio, the better. The rest, the other 5, okay, gross profit margin, operating profit margin, net profit margin, the rest, the higher the ratio, the better. Okay, so in terms of similarity of terms, you can see ada 3 ratio with margin. Gross profit margin, operating profit margin, and also net profit margin. So here for these profitability ratios, you can associate margin again with sales. Okay, when you see margin, you boleh letak sini, this is actually sales. Tapi jangan bagi ratio dia gross profit sales. Nobody knows about gross profit sales because the name is gross profit margin. But anyway, similar like turnover just now, okay, you can see 2 parts of the ratio, which is first kita ada nama gross profit, and then next kita ada sales. Alright, but kalau tadi turnover, besides know the turnover is equivalent to sales, we also turn it over in terms of positions. Okay, but for this margin, we're not going to do that. Okay, so meaning the name of the ratio kita akan gunakan in logical order, which indicates the formula. So meaning if it's gross profit margin, it will be gross profit divided by sales. Okay, operating profit divided by sales. Okay, net profit margin is net profit divided by sales. Okay, so it's very logical order lah. You tak akan salah in terms of the punya positioning. Okay, net profit divided by sales. Okay, but again, let's look one by one lah. This is just some intro to the ratios. So we're gonna look at 6 ratios. But again, maybe in terms of example, check kejap kita akan tengok soalan ataupun I will show you the calculation based on 2 ratios je, which is net profit margin and ROA, return on assets. Okay. First, the gross profit margin. As I said, the formula ada gross profit, ada sales, so therefore the formula is gross profit divided by sales. So this measures the ability of the firm to control the variable costs. So variable costs, this is actually the cost of goods sold. Okay, cost of goods sold, which is component, variable cost component or cost of goods sold of the firm. So the higher the ratio is desirable as indicates lower cost of goods sold relative to sales. Sebab nak dapat gross profit, kita kena ambil revenues minus cost of goods sold. Then we get the gross profits. And again, the answer in percentage. So don't forget to multiply with 100. So the higher the ratio indicates the higher contribution or margin. Again, walaupun tak ada comparative, but for gross profit margin, I tunjuk juga lah. Just to get the feel of how we calculate the gross profit margin. So the formula is gross profit, we divide with sales. Okay, the gross profit is 499,300. And the sales is 800. And don't forget, multiply with 100 to get the percent. So 499,300 divided by 800. So you're going to get 62.35%. So again, we don't know whether it's good or bad because we don't have point of reference to compare. Okay, but this is the level lah. So one way to look at this, okay, it means that from the sales value, 62%, okay, will be converted into gross profit. So that's the alternative way to see about the margin ratios. Okay. So kalau you ada you can then from here you can estimate juga lah, if you get a 1 million sales, okay, if you get 1 million sales, possibly you're gonna get about 620 31 million. So kalau 1 million, so you're gonna get 620,000, 350,000 of a gross profit. Okay, so we can estimate lah based on kalau kita nak buat estimation. Okay, kalau next year kita nak achieve sales of 100 million, berapa kita punya gross profit, kita boleh agak-agak lah dia punya gross profit that you can get. Okay, because yeah, this is another way, the usage of ratios. We can do it as estimation. Okay, so that's gross profit margin. Then we have the second one, operating profit margin. And as I said, operating profit margin atau operating profits is also an alternative name for earning before interest and taxes. So don't get confused. Some guna operating profit, some guna EBIT. You kata you tak nampak ataupun tak jumpa information tu. It's actually the same thing. And again, we're going to divide with sales values. Alright, and operating profit, kita akan tolak first the variable cost, which is cost of goods sold, and then we're going to minus the operating costs. Usually when we talk about operating costs, it indicates the fixed costs of the company. Kalau cost of goods sold tu variable cost, okay, kalau fixed cost is the operating profit. So again, the higher the ratio, the better, which indicates that they have a lower cost structure, okay, and indicates better productivity with the operations because they generate higher operating profit lah. Okay, so nanti you try for the ABM motorist punya question. Okay, because we don't have point of reference, so I'm not going to do this. I'm going to skip. Next, we have operating ratio. So this is the ratio, like I said, yang the lower ratio is better for this type ataupun this category, which is profitability. So this is the alternative way to measure the operations of the company. Kalau tadi kita tengok from profit, here we're going to look from profit, but here yang second one ni still bahagi dengan sales. Instead of profit, kita measure the expenses, okay, the operating expenses. So that's why the ratio is lower better. Sebab bila kita cerita pasal expenses, kita nak expenses kita to be at lowest as possible. Okay, so as I said, it's similar to operating profit margin, except it looks at the cost, not the profit, the expenses. And this can indicate how the management control the costs of the operations. Okay, so the lower the ratio, the better the efficiency. So that's why, soalan ni tak tanya tadi if you don't calculate the EBIT, either most of the time dulu lah when you have this, dia tak calculate EBIT, dia guna EBT for example. So obviously your for example your times interest earned salah, your operating profit margin also salah. Okay, and operating expenses ada dekat sini lah. The operating expenses is 90,000. Okay, so as compared to the mana tadi, which is the profit is 409,300 and so the expenses is just 90,000. Right, so let's move on to the next one, the fourth one. So this is the final margin ratio. Okay, kadang-kadang net profit ratio atau kadang-kadang they use the word margin. Selalunya kita guna margin lah, net profit margin. Okay, so this measures the after tax. Remember, this is after tax, meaning after we deduct the tax to get the net profit ataupun net income. Okay, ni final information Net profit equals to net income equals to earning after tax. So tiga-tiga terms ni sama je. Net profit, net income, earning after tax. Okay, they are all referring to the same thing. Okay, so again, for the margin ratios, the higher the better. And here we can compare lah sebab soalan tadi So for this question, the net profit margin of the industry is 21%. Okay, 21%. So if you want to calculate the net profit margin, so we're gonna use net profit and also sales and multiply with 100 lah. So the net profit, net income is 239,820. Okay, and the sales is 800. Okay, times with 100. So it's almost 30%. Dia punya ratio 29.95. Okay, close to 30%. Okay, and as compared to the industry average, it's just generate about 21%. So again, one way to look at this is by looking at the sales. Kalau maksudnya, if you want to do estimations, if the company can generate 1 million ringgit, this company can generate the net income around 300,000 ringgit. Okay, 30%, because this is 29.95%. Okay, so meaning almost 30% from the sales value will be converted into net profits. So dah jump, dia boleh skip yang lain ni, estimation ni dia boleh skip terus dapatkan the net profit. The last items. So that's the purpose of net profit juga. Sorry, net profit margin. So that we can estimate from the sales, kita tahu berapa net profit dia. Okay, this is again useful if you want to do estimation. In fact, some planning punya techniques we're going to use later, we will use net profit margin lah to measure, to cut through all the items just to get the net profit. So how to comment again? The higher ratio, the better kan, for the net profit margin. So in this case, we can say that ABM Motoris has a better net profit margin as compared to the industry average. And this indicates that the company has a better income available to the shareholders. Because if you recall again, I actually take last week, the net income of the company, okay, once the company announced the net profit ataupun earning after tax to the public, next what they do, they will declare dividend pula. Okay, so dia akan bayar dividend kat sini to the shareholders, and the rest of the money they will put it under retained earning. Okay, retained earning ada kat mana? Ada kat dalam income statement. So as a shareholders, okay, so you want to see how big is this net income, because the higher the net income, the higher the margin. It indicates that the possibility that you can get higher returns. What kind of returns? This part lah, dividend. But still kita tak boleh measure berapa actually dividend yang kita akan dapat, tapi as a general rule of thumb, kita boleh nampak, okay, this company has a very good net profit punya ratio. Okay, so there's possibility to get better income. Right, next, the final two ratios under profitability, kita ada two returns ratio, return on assets, return on equity. So kalau margin tadi we associate with sales, for the return, okay, for the word return, we're going to associate again with the net profit ataupun earning after tax. So that's why for ROA, the return, we use earning after tax. And since they return on assets, so return atas asset, so return ke atas, assets as a denominator dekat bawah. Okay, so we multiply with 100. Okay, so it measures the overall effectiveness of the management in generating profits based on its total assets. So how digunakan the total assets in order to generate sales. Okay, so the higher the ratio, the better. Okay. And the last one, kalau tadi ataupun sekarang ROA is returns divided by assets ataupun earning after tax divided by assets. If it's return on equity, we know already it will be earning after tax divided by total equity. Okay, so for this ratio, the higher the return ataupun the ratio, the better off are the owners because equity are measurement for the shareholders. Okay, so the higher the ratio indicates a higher return to the shareholders. Okay, so for the last ratio in this question is ROA sebenarnya. ROA. So for ROA, it will be earning after tax divided by total assets. So earning after tax there is 239,820, and the total assets is 367,000. Okay, multiply with 100. So it's around 65.34%. So again, compare against the industry average, the ROE is only 50%. So therefore, we can conclude that this company, okay, ABM Motoris has a better return on assets as compared to the industry average, which indicates that the company is better in generating utilizing its total assets in order to generate the net profits, which is a better indicators of returns to the shareholders. Okay. To ROA. Okay, effectiveness of management in generating profits, which is net profits, using the availability of their total assets. Okay, so that's the final ratio for the fourth category, right, which is profitability. Okay, just to recall balik this question. Okay, this is a typical question when we talk about test or exam before. Okay, and sepatutnya dah tahu, and memang tahu pun, we don't have final exam anymore, right? But based on this pattern of questions, so ini baru tunjuk satu sem kalau you tengok every semester before that, they're gonna ask you 8 questions saja ataupun 8 ratios saja out of whatever that we've learned before this and today. And we have 8 ratios. And so far, I showed you 4 categories. Kan? Kita ada liquidity, we have leverage, we have activity, and we also have profitability. So 4 categories, 8 ratios, okay, simply means every category, they're going to ask you two ratios here. For example, liquidity ada 2, current and quick. Okay, there's no net working capital. Similar like leverage, we have debt ratio and times interest earned. So they skip the debt to equity ratio. For activity, we have 5 earlier, but they ask ACP and inventory turnover. And profitability just now is out of 6, they just ask you net profit margin and ROE. Okay, but again, last time, okay, when they have this final exam, the ratio ni will be rotate lah. Some of the ratios, and not all, some of the ratios will change every semester, but some of the ratios you can actually predict. Okay, last time ratios like current, quick ratio, times interest earned, ACP at least 2, 4. Yeah, and inventory turnover I can see lah. These 5 ratios almost every semester ada. 99% they will use these 5. So meaning 5 out of 8 you dah boleh agak dah dia nak tanya yang mana. So the rest they will rotate lah. So some semester mungkin instead of debt ratio, they guna debt to equity ratio. Sometimes they might use, they don't use net profit margin, ROA, they boleh guna operating profit margin and ROE. So they randomly choose for you. Okay, but you don't have to worry about that anymore because we don't have final exam. Okay, and this topic, how we measure you is by giving out assignment, group project saja. So therefore, again, you don't have to memorize pun the formula, right? But so far we have 4. If you remember, we have 5 categories actually. Okay, so kategori yang kelima, which is the market ratios, this will not be tested in the exam before. Okay, dia tak akan tanya dalam exam. Reason kenapa tak ada? Simple, because some of the information when we want to calculate the market ratios, it's beyond, okay, the income statement dengan balance sheet. It will not be available under the balance sheet ataupun income statement. The information, we need to get it somewhere else. Okay, we need to get it somewhere else. Right? So that's why tak ada dalam final exam. However, for presentation juga lah. Tapi for assignment, you can find the information because it's available in the net. Okay, dalam internet ada. So jangan ignore lah market ratios for you guys. You still have to know what are the market ratios and how to measure, how to comment juga. Sebab for your assignment, there will be parts of market ratios that you need to find. Okay. So these market ratios, again, only available for public listed company je. Because for public listed company, they're going to have market price. For example, kalau company tu bukan public listed, dia tak ada market price sebab dia tak jual the shares in the market and in the share market. So they don't have market price. So therefore, market ratios is only available for public listed companies who trade their shares in Malaysia, in Bursa Malaysia lah. Okay, dia ada market price, dia ada number of shares outstanding, which is only public listed company have. Anyway, we're gonna have another 6 ratios. So we have earning per share, dividend per share, dividend payout ratio, the dividend yields, book value per share, and also PE ratio, price earning ratio. So I cannot use the earlier example, the Ebit Formula, to show you how to calculate because we don't have the information like calculate. So I just can explain je lah. Okay, these 6 ratios. So the first one is earning per share or EPS. So earnings again. Earnings is actually refers to earnings after tax, the net profits. Okay, and in order to get it per share basis, we need to divide it with the number of shares. Okay, so number of common shares ni is also known as NOSO. Okay, which is number of shares outstanding. Okay, so number of shares outstanding, you cannot find it dekat balance sheet or income statement. Instead, dalam annual report still ada it's still in the annual report. You might want to find this somewhere else. Mungkin dalam notes. Mungkin ada dalam notes. Kena cari dalam notes to the notes to the statement. Okay, dalam notes to the statement. Dalam topik before this I showed you kan contoh macam ni kan. Alright, so dalam share capital ni kan ni ada note ni, so you can see the notes numbering kat sini. Alright, so when we talk about equity ataupun number of share outstanding, you can find it most likely dalam note number 25 untuk contoh ni lah quick finance house ni. Look dalam share capital, this is the values. Okay, the values in ringgit. Number of shares outstanding tu is in units, berapa units ada. So to know how much is the number of shares outstanding, you might want to look at the notes number 25. So notes ni ada dekat belakang lah. So cari notes to financial statement number 25. So kat situ dia akan explain lah, okay, berapa number of shares outstanding, multiply with the par value, dapatlah this amount, 226,125 contohnya. So that's where you need to find the NOSO, the number of shares outstanding. Net profit tadi you can get again from the income statement. So the answer is in ringgit. Dalam case kita ringgit lah, it's not in dollar sign, but it's in ringgit. So again, the higher the ratio, the better, because meaning as shareholders, okay, you're gonna have a better income per unit basis sebab kita bahagi dengan number of shares outstanding. Right, so that's earning per share. So anything per share, whatever ratio yang per share ni, you're gonna divide with NOSO. Okay, number of shares outstanding. Walaupun terms mungkin berubah from one ratio to another, it's technically the same number of shares outstanding. Okay, so next, okay, is dividend per share. Okay, dividend per share. So dividend per share indicates the amount of current earnings paid out, which is really this is the current earning paid out. This is actually dividend. Okay, specifically cash dividend, because some companies might not pay cash. They might give out non-cash dividend. Okay, and this is based on per share basis as well. So kita bahagi dengan shares outstanding. So shares outstanding ni apa? This is NOSO juga. Okay, remember, whatever per share basis we divide with number of shares outstanding. So again, the answer in ringgit. Okay, the higher the ratio, the better juga lah. The higher the ratio, the better to the companies. Okay, so earning per share, dividend per share. So the third one, we're going to use the first and second ratio together. It's known as dividend payout ratio. Okay, so dividend payout ratio simply means the triangle I mentioned earlier. Kita ada net profit tadi ya, net profit. You're going to pay dividend to the shareholders, and the rest we're going to pay ataupun we're going to put inside our retained earning. So retained earning ada dalam income statement juga. So when we talk about dividend payout ratio, we are talking about what is the portion of the dividend payment ni. This portion berapa? So for example, if the net profit of the company, company itu dah generate profit katakanlah 100 million ringgit. Okay, the company generate 100 million ringgit. Okay, so what would be the dividend payout ratio? Okay, so we can see how much actually the company pays the dividend. Katakanlah out of this 100 million, company to declare they will pay 30 million ringgit worth of dividend. 30 million. Okay, so kalau dividend 30 million, so we know retained earning will be the balance of it. So 100 minus 30 would be 70 million. Okay, so when we want to measure the dividend payout ratio, what we do is to take the dividend portion. Okay, we divide with the earning portion. So that's why in order to get the dividend payout ratio, we can use this formula juga lah, which is 30 million divided by 100 million. Dalam case ni example je. So you get about 30, cuma ni persen boleh guna dalam percentage ataupun dalam point. So dalam case ni 0.3, which is in ringgit, 30 cents. Or you can use it in percentage, which is 30%. Okay. But this is formula ni, you nampak saya tak ada per share kan. Okay. If we have EPS and dividend per share, we can use that information. Okay. But if you notice, we have per share basis for both. EPS, which is dividend divided by number of shares outstanding, and earning per share, it's net profit divided by number of shares outstanding. So if we knock off the per share basis for both ratios, so technically it's dividend divided by net profit. So that's what I did just now. Okay, so alternatively, if you don't have the per share basis, you can just take dividend divided by net profits in order to get it, to get the dividend payout ratio. So here the answer in ringgit dia kata, so the higher the ratio indicates how much earnings that you can get from your investment. So here, kalau dia dapat 30 cents macam ni bermaksud for every RM1 net profit, you're gonna get 30 cents as your returns. Kurang macam tu lah. From every RM1 of your investment sebenarnya, from RM1 of your investment, you're gonna get 30 cents. Not investment, betul lah, initially tadi, from RM1 of net profit, you're gonna get 30 cents of earnings. Okay, so that's dividend payout ratio. Right, the higher the ratio, again, the better for the company, as for the investor. The fourth one, dividend yields, also known as the current yield. And this will measure the rate of returns of the investor. So again, the formula is DPS, dividend per share, which is from our second ratio. And now we have to divide with the market price per share. But for this case, we cannot eliminate per share, dia tak boleh kata nak dividend, then divide dengan price. But price is memang per share. Whichever price quoted in the market, memang per share basis. Dia tak ada price in total. Okay, so for this dividend yield, we're going to use dividend per share, which is from our second ratio, divide with market price per share. Okay, and again, this price per share, kita tak boleh nampak dekat dalam income statement ataupun balance sheets. So we need to find it somewhere else. So where to find this information? You can use Bursa Malaysia punya information. Okay, dalam Bursa Malaysia, you can find it in Yahoo Finance, for example. Historical, especially historical prices. The Star Business mungkin ada. Let me check. At least the current one, the Star Business section. Ataupun the Star Market Watch section. Dia ada satu lagi website yang ramai juga orang guna, Morningstar kalau tak salah. Okay, so you can use any of the portals here to find historical data for the price. Okay, I think Morningstar ramai orang guna, Yahoo Finance pun ramai orang guna juga. To find, like I said, historical prices of the stocks. All right, so here the dividend yield, when we talk about yield, the answer will be in percentage. So don't forget to multiply with 400. Okay, so this indicates the percentage of returns for every dollar that you invested. Okay, two more, kalau tak salah. So we have BVPS, book value per share. Okay, so again, when we talk about per share, we know we divide with number of shares outstanding. Also, number of shares outstanding. So here is common equity divided by shares outstanding. So when we talk about common equity, so this is actually sometimes kita guna common stock sebenarnya. Common stock value. Ataupun sometimes they use share capital. So whatever information lah yang ada, we divide with number of shares outstanding. So this is based on book value. So when we talk about book value, this is actually based on the statement atau based on accounting, what will be the value of the equity lah for one unit basis. Okay, so that's the value remain for common stockholders if the company liquidate all the assets. Okay, so that's your return lah basically. Okay, ataupun the value of your investment in the company. And the last one is PE ratio. Okay, so this is another ratio, can be used internally or can be used by investor. Right, so for PE ratio, the formula is again price and then the other earning. And so price is based on market price per share and the earning is based on earning per share. So this is our first ratio just now under this category. Okay, so kalau ratio dia tinggi, it indicates overvalued. Kalau ratio dia rendah, it is undervalued. So what does it mean? Okay, from investors' point of view, we always want to invest if the PE ratio is low because we want it to be undervalued. Okay, but from owner's point of view, we want it to be as high as possible so that it will be considered as overvalued. So there are two ways how to look at PE ratio. Okay, so selalunya since kita measures about the performance of the company from internal point of view, so we want it to be as high as possible. Okay, so that it will be overvalued. So as an investor, kita nak dia overvalued. But for potential investor yang belum beli lagi, we want it to be undervalued. Anyway, so that's our final ratio. So ada berapa total tadi 3 plus 3 plus 5, 11 plus 6, 17 plus another 6. So we have 23 ratios altogether. Okay, but bear in mind, I will not ask you to calculate all ratios lah for your project nanti. I will just choose a few for every categories, and you need just calculate whatever ratios requested ataupun required from the question later. Okay, not all 23 ratios, so don't worry about the numbers, which is too much nanti. Okay, so the other example juga kat belakang ni, you can try, you can check if you want to see how it works. Okay, obviously without the market ratios juga lah. So there are three types of analysis that can be done for the financial ratios. First is known as trend analysis. Okay, because as I said, a stand-alone figure without comparison is worthless ataupun I said tadi apa useless. Okay, without proper and correct interpretation. So the three ways. Number one is trend analysis. Okay, ataupun usually kita panggil dia time series. So what does it mean? For trend analysis, one company, multiple years. Okay, satu company for 3 years, for example. Okay, so proper analysis require at least 3 years. So meaning company A, you tengok 2017, 2018, and 2019. So check lah dia punya time series dia. Is it improving or declining, for example? Ni tadi. You can see whether it's improving or declining. Okay, so again, even though we use mostly quantitative, and usually we can use graph to check the pattern, something like that, so we can track. So graph is very important when we do ratios lah, so that we can track the performance. So second types of analysis is called comparative ataupun cross-sectional. So the one that we did just now based on past year, that's comparative. We compare one company against the industry average, or you can compare other companies. Okay, but other companies must be from the same industry. Itu rule dia. You cannot compare satu company in property, satu lagi in peladangan contohnya. It's not fair to compare that way because their nature of business is different. Okay, but for comparative, we're gonna use 1 year je. Kalau tadi time series ya multiple years. So here comparative means multiple company, but 1 year. Okay, just like what we did in the yang final exam question tadi. So we have ABM motorist, compare industry average for the year 2018. 1 tahun je, which is comparative. Okay, but to get the best out of our ratios, we can use what we call as combined analysis. Combined analysis. So from the word you know already lah, dia akan combine number 1 and number 2. So what does it mean? We're going to have multiple companies. Okay, for multiple years. Okay, because they compare the trend and comparative analysis, and we can see the trend of multiple companies juga related to the industry. And this is what we're going to use for your assignment ataupun project. Remember, your project to contribute a lot of marks. So obviously, when we talk about a lot of marks, you can do a lot of things lah kan. Takkan nak buat sikit dapat 50%, almost 50% comes from that, because kita ada projects and you have presentation juga from the output of the project. Okay, so you're gonna use combine, so meaning you will see you have multiple companies, sebab you akan ada multiple group members kan. So every group members kena pilih company sendiri. You tak boleh rely on others. You have to have your own companies and you're gonna have multiple years. So I akan guna yang minimum lah. We have 3 years minimum kan. So that's what we're gonna do. And then you can combine your output, your results of each company to compare between all the members punya results. So make it a very comprehensive analysis lah, I can say, within the same industry. So it's very, very detailed information yang I akan explain nanti. So limitations. So nanti baca lah kot limitations ni. Why obviously financial ratios we cannot say it is perfect. Obviously ada dia punya disadvantages dia, right? So nanti baca lah ni. Okay, so with that we end topic number 3. Alright, and this topic number 3 relates dengan topic number 2. Sebab topic number 2 is just a statement, you understand the statements. But for the calculation part, the analysis part comes from this topic number 3. And this topic number 3 will be used as part of your project. Okay, ada soalan tak? Okay, so if there's no questions, last week I ada cerita kot pasal group kan. You can identify already who will be your potential members. Please find members. Okay, don't be alone. Alright, I know some of you might not know each other. Now lagi susah sebab kita tak jumpa kan. So utilize the WhatsApp group tu kalau nak cari members. In this group, if I'm not mistaken, we have 20. Right, so we have 20 students. So I'm gonna set about 4 in the group. So empat orang dalam satu group. So we're gonna have 5 different groups. Okay, 5 different groups. And later on, I will post the instructions, what you need to do. Okay. So your task now is to find the members. And potentially to identify the industry yang you nak buat the analysis ni. Okay, so every groups, kita ada 5 tadi saya cakap potentially, will measure 5 different industry. I don't want you to measure the same industry. So what kind of industry? You can refer to Bursa Malaysia, for example, to look at the industry. I'm not sure. I don't know kat sini.
Saya nak tanya, just to be clear.
Yeah.
Everyone dia kena ada different industry. One company, seorang satu lah.
Seorang satu company. So for example, I nak bagi example nanti you tak boleh pilih company tu. Okay, I guna bank lah senang. So don't use banks.
Okay.
Okay, so for bank, financial industry, financial services industry. So kalau company group tu pilih financial industries, so ada 4 members kan. So satu ambil Maybank, satu ambil CIMB, satu RHB, satu Hong Leong contohnya. So 4 company yang sebut tu semua tak boleh ambil lah. So choose other industry lah. Dia ada banyak industri kan. Mana nak tengok.
Sorry. Dia kalau kita pilih property, semua satu group property lah punya company.
So group yang pilih property tu akan ada 4 different companies within the property. So group lain jangan ambil property lah, ambil lah industri yang lain.
Alright, okay.
Okay, so how it works, I will post dalam future nanti. Maybe by today or by tomorrow, I akan letak instruction together with, I kata, I'm gonna open sebab dia akan based on first come first serve basis lah, to be fair. Nanti kan berebut pula kan. So first come first serve basis. So once I post it, so siapa yang awal book the industry together with the company, then orang lain tak boleh ambil lah. Okay, you have to choose others. Alright, so just watch out my post lah dalam future tu nanti. Anyway, 1 minit lah. I give you a short break sekejap lah maybe 4 minutes. 10:05 nanti kita akan continue dengan maybe memang takkan habis. I'm gonna focus a bit about topic number 4 about forecasting. Okay, out of these two maybe I akan buat instead of cash budget, I akan buat method of forecasting dulu. Sebab method forecast ni maybe faster as compared to cash budget. Okay, so let's take sekarang tinggal 3 minutes break. All right, let's proceed with topic 4. So for topic number 4, financial forecasting and planning. So from the word itself, you can see we have forecasting and planning. So this indicates that something that yet to happen. So something for the future. Right, kalau kita tengok financial ratios tadi, we measure historical performance, right? But for this topic, ataupun for this section, we're gonna do some planning and forecasting, right? Something yang for the future. So there are going to be two parts ataupun two statements, I can say lah. There are two statements that we can prepare for this matter, which is cash budget and financial planning atau financial planning pula. The profit planning kita panggil profit planning ataupun methods of forecasting. So for the method of forecasting ni, what we're going to do is actually we're going to prepare what we call as Proforma Statements. Okay, so we have two statements. Kita ada balance sheet, kita ada income statement. So we can prepare both. Okay, but we're going to focus only on Proforma of the balance sheets sahaja. Right? So I'm going to skip cash budget for today because it's rather long kalau nak discuss. So I'm going to focus only on the Proforma. Kalau sempat lah, habis hopefully sempat. Right. So the process of forecasting as a general is a process of estimating firm's future financing requirements. Okay, both can be used to measure ataupun to identify what will be the financing ataupun borrowing requirement either for cash ataupun for Proforma statement. Okay, so the main objective is to do financial forecasting is to estimate the firm's future financial needs. Okay, so two methods as I said. Cash budget dengan Proforma financial statements. Okay, so I will skip cash budget dulu. Okay, but instead kita go straight to Proforma method of forecasting. So we have two types of Proforma financial statement, but like I said, we're gonna do Proforma balance sheet saja. And for Proforma income statement, instead of we do the whole statement, we're gonna use ratios instead. Okay, so you've learned about ratios sebelum ni kan? So we're going to use some of the ratios inside our Proforma income statement, right? And this method, we use what we call as the percent of sales method. So what does it mean? When we do forecasting, we're going to assume, okay, the company would want to increase their sales next year. Biasalah, as a company, dia akan target, okay, next year kita akan increasekan our sales by certain percentage. So that percent, we're going to use as our method of forecasting. Okay, we will estimate the investment requirements based on that percent, and on top of that, when we invest, we want to know where can we get the financing. Okay, the funding tu datang daripada mana, internal ataupun external. So it's involved estimating the level of expenses, asset and so on. Okay, sebab dalam balance sheet, as you all know, ada assets, ada liability, ada equity kan. So we're going to increase that level, right? And from asset side, it's part of the investment of the company to support the increment of sales. And obviously, if you want to invest assets, we want to know where the funding comes from. Adakah datang daripada liabilities or also equity? Okay, so the sources, as I said, it can be spontaneous. Okay, kalau spontaneous ni datang from internal. Okay, or else kalau dia tak boleh generate from inside, from internal, they might have to borrow outside, which is from the non-spontaneous, which is considered as the external, okay, as the external source. Okay, so we're gonna estimate increase. Okay, ni agak complicated kalau nak guna notes ni. Boleh je baca notes ni. Sekejap tak prepare lah pula. Let me think. Dia ada satu contoh dalam notes ni, then you can refer later, but for me, I think better I guna different. Bear with me. I pun tak share punya presentation, tapi tak apa, kejap Okay, so let's look at this first. So when we talk about proforma question, usually they will give you one set of complete set of statement of financial position ataupun balance sheets based on this year, for example, 2017. And the question will ask you to forecast, okay, what will be the pro forma of statement of financial position for the following year. For this example, this will cari for the year 2018. Okay. And dia bagi a lot of information jugalah kat bawah ni. Right. And this is the original set of statement of financial positions. So in terms of format, you don't have to worry, right? The format will be the same as our statement of financial position. The items will remain the same as well. Okay, items akan remain the same. So again, if you remember how I partition kan information ataupun the groups dalam apa statement of financial position ni, for example, on the left hand side kita ada assets kan, but we have two parts of assets. First, we have cash, sampailah inventories. This is our current assets. And net plant dengan land ni is actually our liabilities. Okay, current liabilities. And on the right hand side, we have account payable, sampailah tax payable. This is our current liabilities. And bond is our long-term liabilities, one sahaja. And for preferred common and retained earnings, this is our equity. Okay. So it's quite important to differentiate the items because the treatment, how we want to forecast will be different from one categories to another. Okay, so remember the format ataupun the method that we're going to use is the percent of sales method. Okay, the percent of sales method. So first thing that we need to identify is how many percent the company wants to increase their sales next year. Okay, so there are two ways how we can find this. Number one, the question might give you direct. For example, like this question, dia kata, the sales expanded by 20%. So this is the percent of sales method, 20%. Okay, I put here 20%. So dia akan berubah sebanyak 20%. The change will be 20%. Okay, so if you get this wrong, okay, the whole Proforma statement akan salah ni. So the first step that we need to know is how much ataupun how many percent will the company wants the sales to increase. Okay, so untuk soalan ni dia bagi direct. But what if the question doesn't provide us with this? So kalau dia tak bagi you this percentage, they might give you 2 years of sales. So for example, in this question, dia bagi in 2017, the sales are 500,000. Okay, dia bagi tahun semasa je, the current one, 2017 of sales only. Okay, but if they don't give you this, katakan dia tak bagi, they're gonna give you one additional information, which is the forecasted sales for 2018. Okay, the year that yang kita nak calculate tu. So for example, katakanlah soalan yang satu lagi, dia kata in 2018, the sales would be I don't know, 750,000. Okay, let's say lah sample je ni. In 2018, the sales is 750,000. Okay, dia nak naikkan to 750,000. So instead of bagi percentage, dia bagi in ringgit as well. So 2017 500, 2018 750. So how to find the percentage? Okay, so to find the percentage, letak kat sini to find the percentage of changes tu changes of sales tu. So what you need to do to use ataupun to find the difference actually, to find the difference between the new and the original one, and you compare against the original one. So meaning it's new sales divided by the old sales, sorry, minus the old sales divided by the old sales. Okay, so new sales dia 750 minus 500,000, you dapat 250,000. So 250,000 divided by 500,000, you get a 50% increment. Okay, and then kita akan gunakanlah 50% as part of our estimations. Okay. Itu kalau dia tak bagi kalau dia tak bagi this percentage. But in this case, dia bukan 750, bukan 750 lah, it's 20%. Okay, so therefore, instead of dia bagi 750, so kita kena estimate sales untuk 2018 still kita kena cari So we can estimate already sales 2018 based on this question would be 500,000 2017. So increase by 30%. So sales in 2018 would be 600,000. So this is the estimation. So this is the situation. Either one, dia akan bagi either percentage and then kita cari sales 2018, or dia bagi current and forecasted and then kita cari the percent. Okay, we need to know all three information. Okay, tapi untuk starts, we need to know the percent. Percent is very, very important. Okay, kalau you salah kira, patutnya 20, kalau dia tak bagi lah, patutnya 20, you kira 25%. So nanti you estimate 25%, so your items kat dalam ni akan salah. Alright, but anyway, so once you have this 20%, we can already start our forecasting. Okay, so to prepare the statement, okay, ikut balik lah dia punya information nama company dia MJA, PTD, LTD. Alright, and we're going to prepare what we call as Proforma Statement of Financial Position as at 31st December 2018. 12 lah 2018. Okay, 2018. So this will be the title. Okay, so the question gave us 2017 KRM. Okay, but we're going to prepare for 2018. Okay, hence the name Proforma. Proforma ni kita punya forecasted. So the items we're going to go through based on categories. Okay, first we're going to start with current assets. So current assets are the 4 items: cash, prepaid expenses, account receivable, inventories. So this would be the rule. Okay, rule untuk current assets. Rule untuk current assets, we're going to increase our current assets by the percent. Okay, every items under current assets kita akan increasekan by 20%. Ataupun dalam mana-mana soalan, based on percentage yang dia nak tukar tu lah, dia nak increase tu. So untuk soalan ni is 20%. So therefore, we're going to increase every items under current assets by 20%. So for example, we're going to start with cash. So items you don't have to memorize. You tengok soalan je, copy balik. Cash, 53,000. Then you increase by 20%. You're going to get 63,600. Okay, this is our new amount. So that's why if you get this 20% wrong, amount yang letak sebagai jawapan ni akan lain kan. Therefore, will be considered wrong. Okay, so be careful about the percentage. Kalau dia bagi direct macam ni, you're safe sebab takkan you salah pilih, takkan letak 5% lah kan. So you know 20% dia punya expansion of sales. Okay, so be careful about this. So next kita ada prepaid expenses. So prepaid expenses dia from 36,000 increase by 20%. So you have 43,200. Then you have account receivable. From 55,000, 30%, you have 66,000. And inventory, 82,000. So you have 98,400. Okay, so these are all current assets. Okay, current assets, rule is simple. You're going to increase every items by the percentage. No rules, no exception. Semua yang akan naik kan. Kalau ada items lain under current assets, again, you're going to increase it. So that's why another important part kat sini, you need to know the items ni belong to which category. Okay, by doing the ratio sebelum ni memang penting sebab you nak calculate current assets divide by current, ni bukan current liabilities sorry. Ni fixed asset. So current assets divide by current liabilities on the other side, you kena tahu items dia. Right, so that's first part, very easy. Now we move on to fixed asset. Okay, fixed asset ni dia ada rule. Untuk soalan ni, the fixed asset dia pecah pada net plant equipment dengan land. Okay, sometimes, okay, just nak tunjuk kat atas ni dia tak pecahkan, dia just use the word fixed asset as in general. Okay, either gross ataupun net lah, tapi it's just fixed assets. So kalau dia fixed asset saja, very easy. Okay, maknanya you tak payah nak pening nak categoriskan dia into what section. Tapi kalau dia tulis macam ni fixed asset, rule dia very simple. Fixed assets akan berubah, it will change, it will increase by the percentage dengan satu syarat. What are the syarat? The syarat is you need to find some statements in the question with regards to the capacity. Okay, macam dalam ni dia kata the company has reached its full capacity. Sometimes they use the word maximum capacity. Okay, so what does it mean by capacity? It indicates that their fixed assets is already fully utilized. So kalau lah kita nak increase the production, okay, they don't have enough capacity anymore because dia dah memang full capacity, full ataupun maximum capacity. So in order to increase the sales, increase the productions, they don't have enough assets, especially fixed asset in this case. Okay, so kalau dia tulis just fixed asset, just like atas ni tadi, macam ni, what we need to do, we need to increase the amount by 20% as well. Okay, kita akan naikkan juga by 20%. Dengan syarat dia dah max sebab sometimes they may use it has not reached full capacity. Atau it's not fully maximized yet, contohnya. So kalau tak full capacity, the amount akan remain the same. Okay, the amount will remain the same. Kalau dia tak max But kalau max like this, we're gonna increase it. Tapi since soalan ni dia pecahkan tau. It's not fixed asset as a whole, but dia pecahkan net plant dengan land. Okay, the ones yang affect will be the one yang relates dengan productions. Okay, the one yang relate dengan production is only net plant and equipment. Land is just land. Tanah tak produce anything. So therefore, the ones yang kita akan increasekan based on this full capacity will be net plant and equipment. Okay, so for land, it will remain the same. Sebab land tak ada kena-mengena dengan productions. Okay, tapi kalau diguna, again, sorry they guna this term only, fixed asset, we're going to increase it. Okay, regardless whatever information ada dalam fixed asset ni, kita akan assume everything will increase by the same amount. Okay, but for this question, net plant and equipment, NPE, we're going to increase it. Why I increase? Because it's reached full capacity. By how much? Again, by 20%. So currently 80,000, naik 20%, gonna be 96,000. Okay, 96,000. But for land, because it's not part of productions, so I don't have to buy new land pun, kan? I don't have to buy new land in order to increase my production. So I will keep it constant 40,000. Okay. So maybe give a bit of space kat bawah ni. So I will get a total asset kat bawah ni. So the total asset will be the sum of all information. So 63,600 plus 43,200 plus 66,000 plus 98,400 plus 96,000 and lastly 40,000. So we have a new total assets worth 407,200 ringgit. So what does it mean? Okay, originally 346,000 but for next year we're going to increase our assets by to this amount, 407,200. So technically kalau you minus dengan current one 346,000 tu, so generally what does it mean? This company needs to invest 61,200 ringgit. 61,000. Okay, this is the investment that they need to make lah. Okay, how I get this 61,200 ringgit? This is the new one and 407,200, and I minus dengan the original 346,000. Sebab dia nak increase from this to this. So assets ni kena datang from somewhere. Dia kena beli lah. Dia kena increase kan. Okay, so how much investment? Sebab assets is part of investment kan. So they gonna need 61,200 ringgit. So that's the left hand side punya explanation. So this company, in order to increase 20% of sales next year, they need to invest this much. So the next question is, where to get this 61,200 ringgit? So that's why we have tadi spontaneous versus non-spontaneous, internal versus external. So the ones yang internal, kita boleh increase internally. Okay, but the ones yang external, we have to borrow from outside. Okay, and that can be found based on the right hand side here. Okay, belah kanan ni, kita ada 3 categories. Okay, 3 categories. Okay, tapi kita boleh label them mana yang internal, mana yang external. So the ones yang internal is part of current liabilities. Okay, current liabilities ni semua internal. Okay, kecuali notes payable. Okay, notes payable is external. Ingat notes payable is short-term debt. Okay, and this debt borrowed from outside. Walaupun dia current sebab dia short-term kan. But this kita dapat from outside. Okay, the rest ni internally. So how to increase account payable? Kita tak bayar je lah. We don't pay our hutang, it will increase account payable. Sama dengan tax payable. How to increase tax payable? Kita tak bayar tax contohnya. So dia akan increase our tax. Right, so that's the assumption lah. Okay, so therefore, on the right hand side ni, the ones yang internal, which is our current liabilities, we will increase by 20%. Okay, we're going to increase by 20% juga. But the one yang external, which is notes payable, long-term liabilities, and equity, we're going to keep it constant. Dia tak akan berubah. It will remain constant. Okay, it will remain constant. So for account payable, for example, account payable, 58,000. Kita akan increasekan by 20%. So it be 69,600. Notes payable. Notes payable will remain constant, 35,000. We don't have to increase it. Notes payable. And then we have tax payable. This will increase by 20%. So 24,000. Okay, and the rest of the items akan remain constant. Okay, so I recap for the right hand side, current liabilities will increase except notes payable, because notes payable will remain constant, tak berubah. Long-term liabilities and equity will remain constant juga. But again, ada exception except for return earning. Okay, return earning je yang lain. But the rest will remain constant. Okay, so what you need to do is copy balik je lah. Bond, 21,000. Then preferred stock. Preferred stock, 45,000. Common stock, 130,000. Right, so we left with retained earning. Okay, so retained earning akan berubah. Okay, retained earning will change, but they will not change according to the 20% increment. We're going to calculate the actual retained earning. So that's why selain daripada Proforma Statement of Financial Positions, you might have to calculate ataupun prepare Proforma of income statement. But since soalan tak bagi kita Proforma income statement, macam mana nak buat kan? So alternatively, we can find the Proforma of income statement. Sebab Proforma income statement, kita nak cari ni je sebenarnya. We want to know how much is the return earning in the Proforma of income statement. So if we don't prepare income statement punya Proforma ni, alternatively, we can use this formula. Formula ni ada dalam notes, the formula of new return earnings. So the formula is return earnings yang original, RE0. RE0 refers to the old return earning ataupun the original return earning. Plus, okay, so the whole kat belakang ni is a big bracket kat sini. Based on S1. S1 refers to sales ataupun the new sales yang baru. We have net profit margin. Okay, remember tadi dalam ratio pun kita belajar net profit margin. N1 minus DPR. Okay, DPR pun kita dah belajar dari dividend payout ratio. So net profit margin is net profit divided by sales. DPR is dividend bahagi net profits. Okay, kalau kena kira lah. So we have 1, 2, 3, 4 elements in order to get the retained earnings. Okay, bear with me kejap I know dah 10:31 ni, just give me a few minutes. So to find new RE, so formula dia I recap balik RE0, which is the original RE from the question, plus, okay, the bracket, new sales, okay, that's why we need to know the new sales yang 2018 tadi, multiply with net profit margin, multiply with 1 minus DPR. Okay. So if we look back at the question, yang ni, the old returning RE0 tu is this one, original, 37,000 ni. Okay, that's the old returning ataupun the existing returning. So the one in the bracket is our forecasted new return earning. So yang dalam bracket ni sebenarnya nak cari return earning untuk tahun 2018. Okay, sebab the nature of returning dia accumulate so that's why kita add dengan the last one. So sales number 1 kita dah define tadi, our sales for 2018 is 600,000. Okay, so sales 600,000. Okay, S1 bukan S0. 0 refers to current, 1 refers to the next year. The net profit margin kita tengok dalam soalan. So dalam soalan ni dia dah kata net profit margin dia 5%. Okay, so you are lucky sebab soalan dia bagilah 5%. Tapi kalau tak bagi, again ingat formula ratio tadi, net profit bahagi sales. Then you might have to find your own net profit margin. So darab 5% and darab 1 minus DPR. The dividend payout ratio adalah 2.5%. Okay, the company paid out 2.5% of dividend. So tolak 2.5%. Okay, so solve in the bracket first. So 600,000 darab 5% is 30,000. So 30,000 is actually the net profit. Kalau you ingat net profit margin is net profit bagi sales kan. So kalau kita ambil net profit margin darab dengan sales, it's actually to find the net profit. Okay, so bila you darab, you dapat 30,000, that's your net profit. And kalau you ingat konsep ni, okay, bila you dah ada net profit, you akan bagi dividend and then the rest masuk retaining kan. So bila you dah dapat net profit 2 ni, dapat net profit 30,000. So 2.5% dividend kat sini. So kalau you tolak dengan 1, mana 1 tolak 2.5%, you know kat sini will be 97.5%. So that's why we minus 1 minus kita ambil ni tolak dengan dividend sebab kita nak cari retain earning. Okay, so this bracket is actually to find the new one ataupun 2018 punya retain earning. So 30,000 multiply with 1 minus 0.025. So you get 37,000 plus 29,250. So this is the new one. Okay, maknanya 2.5% daripada 30,000 dividend. The rest, which is 29,250, will be retained earning. Okay, plus with 37,000. So you're going to have here 66,250. So this amount yang kita akan masukkan dalam retained earnings, 66,250. So bila on the left hand side ni kita tahu 407,200. So we know total liabilities and equity kat sini would be 407,200. Okay, can you help me tak? Tolong kira yang ni. Dapat tak 407,200? Dapat tak? This amount 69,600, 35,000, 24,000, 21, 45, 130 and 66,250. Dapat tak 407,200 ni?
Macam dapat 390,850.
30?
390,850.
So kita short by berapa ni 407,200. Kita short by berapa?
Short by 16,350.
16,000
Yup.
350.
Yeah.
50.
Okay. So apa nak buat kalau short? So this amount 16,350 ni kita letak kat sini. Dan baru dapat 407,200 kan? So this 16,350, this is what we call as additional funds needed. Okay, this is amount yang diperlukan from external tadi. Okay, remember yang internal kita dah increase kan? We've increased account payable, we increase tax payable, but the rest kita remain constant kecuali RE lah. RE akan increase based on our estimations. So the one yang kita perlu cari lagi is based on AFN. So this one essentially is a process juga sebenarnya. This is to process untuk mencari additional funds needed. AFN stands for additional funds needed ataupun external funds needed. So this amount 16,350 is actually amount yang diperlukan from external. So for this company, so what I can conclude here, this company needs to invest 61,200 ringgit. Okay, ni amount yang dia perlu invest tadi based on our increment of assets, okay, to this much. And a portion of it dia boleh dapatkan from increment of account payable with tax payable tadi. So dia naik by 20% each lah. Okay, so a portion of 61,000 dia boleh cover from here, but still ada 16,350 yang tak tahu dia nak pinjam daripada mana yet lah so far. So this is what we call as additional funds needed. So as a forecasting punya method, so kita boleh tahu lah, okay, company nak increase 20% sales next year, so they're gonna invest 61,200. So after we do our Proforma financial statement, then we know, okay, this company still needs 16,350 ringgit from our side. So they can plan. Okay, so this amount dia nak kena pinjam from where? Okay, either dia nak gunakan notes payable ke, so I letak star kat sini, option yang dia boleh naikkan ataupun dia dapat pinjaman. It's either notes payable, bond, preferred or common stocks. So dia boleh pinjam dengan bank, short term basis, ataupun dia boleh issue bond for long term basis, ataupun gunakan equity, preferred ataupun common stocks. Okay, how much? By this much. Okay, so just one last thing Untuk soalan ni memang dia habis macam ni je lah. Okay, but okay, ada certain soalan dia boleh tambah satu statement lagi. Okay, statement dia adalah the amount ataupun the amount required, okay, the amount ataupun the additional funds required tu can be funded by either any of these four. Dia akan mention lah, okay, any amount required will be absorbed by notes payable, katakan. Dia boleh cakap macam tu Any additional funds needed will be absorbed by notes payable. Okay, walaupun masa kita kira tadi notes payable remain 35,000 kan, but if ada statement tu dalam soalan, kita akan cari AFN. Okay, sebab soalan pun cari how much additional financing tadi kan, additional financing needed ni. So that's our AFN. So we gonna transfer that amount masuk dalam notes payable. Okay, depending on question lah. Dia boleh kata notes payable, dia boleh kata any additional funds needed will be absorbed by bond contohnya. So kita transfer lah amount ni masuk dalam bond. So itu final step yang you kena buat kalau ada information macam tu. Alright, but for this question tak ada kan, so the statement akan nampak macam ni lah. This is our final statements. This is our final result lah. But we might have to adjust our statement kalau ada statement yang macam I cakap tadi. Okay, amounts required will be absorbed by whatever lah, contoh I bagi, the amount will be absorbed by notes payable. So what happened? This will not be around. Ni tak ada. Tapi 16,350 ni you akan tambah dekat sini. So it will be 5 plus 60. So you're gonna be 51,350 lah. Okay, so this is new amount untuk kat sini. So maknanya total still akan jadi 407,200 tapi you don't have AFN anymore. So AFN ni dah di-absorb by notes payable. Okay, so it's all depends on question. Itu satu twist terakhir lah selepas you dah calculate. Check dalam soalan ada tak ada suruh absorb by mana-mana. It can be notes, it can be bond, it can be preferred, it can be common stocks. Okay, so the process akan sama. You still have to find AFN. You still kena cari macam ni. Right, but the final steps you kena transfer. You have to transfer this to respective sources lah. Ni semua source of external. Okay, but for this question, as I said, tu semua tak ada lah. Dia akan jadi original macam tadi ya. Dia akan jadi original macam ni. Cuma kalau ada, dia sebut will be absorbed by so and so source. Okay. I recap, it can be notes payable, it can be bond, it can be preferred or even common stock. So what you need to do, just transfer amount ni masuk dekat respectives. Kalau dia suruh, dia kata will be absorbed by notes payable katakan, tapi you biarkan notes, your statement look like this, you might not get full marks lah sebab you tak transfer information tu. Mungkin akan ada deduction of marks lah ataupun you tak dapat marks. Okay, I think that's about it. Dah 10.44 dah. You pun ada kelas lain. I pun ada kelas lain lepas ni. So, thank you very much. So, I will upload the videos juga nanti dalam link tu. So, don't forget attendance. Sorry, taking slightly longer time as expected. And insyaAllah, I'll see you guys in our next seminar. So, look out for my instruction untuk assignment tu nanti ya. Right, thank you very much and Assalamualaikum.
Thank you, sir. Waalaikumsalam.
Thank you very much. Thank you.
Thank you, sir.
Alright.